It's been a volatile month for the rand, but what do the next 6 months hold for the South African currency? With me is Shaun Murison from our Johannesburg office. Shaun, it really has been quite a bumpy road for the South African rand, hasn't it?
Yeah, it's been very, very bumpy. If we look at the charts, it reflects, the inactivity on the labour sector, within the platinum sector, now within the manufacturing sector. And we've got some warning signs that the rand could potentially weaken further.
I mean, if we look at the percentage gains against the euro, for instance, you say, we're at 10.7% over 12 months, a 1% difference, so year to date.
Yeah, against the euro, I mean, the rand has been underperforming even its fellow emerging market peers. When you look at the chart of that euro versus the rand, we can see what's starting to form an inverse head and shoulders formation. Now, an inverse head and shoulders is a bullish reversal, so in this situation it would favour further weakening of the rand, so even more. But for that to confirm, we need the price to start closing above that sort of neckline, that resistance level, which is sitting at about 1470, and we could see if that does occur, we could see the rand move towards about 1535 to the euro.
What sort of time frame would you be looking at for that?
Like I said, the pattern hasn't triggered. We need that confirmation for the price to close above that level. But generally, it's taken 2 or 3 months for it to get to sort of bottom out in terms of rand strength. So I think maybe perhaps over the same sort of period, two or so months.
Let's look at it against some of the other currencies now. Obvious one, of course, is to look at it against the dollar. Again, we are the high 11.3176 at the end of January. We've had similar moves, though. You look sort of the 12-month and then look again year to date.
Yeah, very, very similar pattern on the dollar versus the rand. The rand has actually performed slightly better against that dollar, but we've got the same pattern, inverse head and shoulders formation. You can argue that it confirmed before this, the end of the platinum strike actually saw strength come back into that rand, but we're looking slightly weaker again. And price close above that 1080 to the dollar, we could see a move towards 1125. So as recent highs, towards those recent highs.
Again, the same sort of time period as before with the euro, I'm guessing?
Yeah, looking at 2 to 3 months. But I think with all these things, we need to consider that we expect one thing. There's a lot of obviously external factors that affect the rand, as well as domestic factors, and we always got to recognize potential failures of these types of patterns. So generally, if you're trading a pattern like this inverse head and shoulders, generally what I'd do is I'd look at a failure level when if the price doesn't close above that neckline, it starts to move below that right shoulder. On the dollar, I think the level is about 1055. On the euro, you're looking at about 1440.
Let's finally look at the South African rand against the pound. I have some interest in this. I'm heading out to South Africa later on in the year. Should I be buying my rand now or later on?
Well, we're looking at a slightly different chart on the pound versus the rand. It's a weekly chart, so it's a slightly longer term chart. Similar reversal pattern, which is a bullish reversal pattern. So it's favour of further rand weakening. So I think you might have a good holiday. You might be able to buy a few more gifts. The target implications from that is the same. We measure the height of that pattern. We project it from the breakout area. We're looking at a move towards about 1870. This pattern is slightly different to the other patterns that we've looked at, as this one has confirmed. When we look at the euro versus the rand and the dollar versus the rand, essentially those patterns were warning signals. We're waiting for confirmation. With the pound versus the rand, we've seen the actual close above that level. The price has actually rallied and then retraced to find support on what was previous resistance. So, yeah.
So by the end of the year, if you could have put a figure on it, sort of in 6 months' time, where do you see it?
Well, is
that too much looking into the crystal ball?
I don't want to forecast too far in the future, but I think that 1870 by the end of the year is a feasible target.